There's often a misconception when it comes to figuring out what you'll be taxed on in your business. This is normally referred to as your net income. Many business owners will take a look at their business bank account and think that this is the number that they'll use for their net income or what they'll be paying taxes on. But it isn't an accurate way to look at it, and it does cause a lot of problems, especially if that bank account balance is lower than the actual net income. I've heard many times that business owners don't think that they'll owe much for taxes because they only have a small dollar amount in their bank account. In today's podcast episode, I cover some of the main reasons why there may be a gap between your bank balance and your net income. It may seem like your bank balance would be an accurate way to tell what you'll be paying taxes on, but you'll find out today what can cause this number to not match what your true profit and loss or net income amount is. Whether you're starting a business or side hustle, you're a self-employed individual, a solopreneur, entrepreneur, mompreneur, freelancer, business owner, bookkeeper, accountant, virtual assistant, or other professional, when you're trying to figure out what your tax liability will be based on, I want you to make sure that you're as prepared as possible for filing your taxes and that you don't have any surprises pop up. You're listening to the Mastering Your Small Business Finances podcast, where we get straight to the point on topics that ultimately affect your bottom line. That's right, as an entrepreneur with a small business, money management, growth, marketing, they all affect your bottom line. I'm your host, Chris Ponick. I'm a certified public accountant, and I've been helping small business owners like you navigate and easily understand these complicated topics for over 25 years. I'm a wife, a mom, a grandmother, and a small business owner myself, so I know your time is valuable. In my free time, I make the best sugar cookies and have mastered an amazing chocolate chip cookie recipe. And that's not just my opinion. You're in the right place. I promise your time will be well spent here. Each week, you'll gain confidence and clarity while making a successful impact on your business and grow your bottom line. Get comfy, grab a cookie, and let's get straight to the point with this week's episode. Welcome back. I want to ask if you've ever grabbed your check register or have taken a peek at your business account online and see that your bank account balance is relatively low. Although you may not be happy with the amount of money you have, you are somewhat hopeful that you don't have to pay too much in taxes this year due to the low balance in your bank account. Well, this is exactly the misconception that I'm covering today. The gap between your bank balance and your net income. The way that you decipher what your net income for the year will be for your business, or what you could start thinking about for your taxable income, will not depend on what your bank account is telling you. With the information that you get today, you'll be much more equipped to understand where the difference is and where you can genuinely look to get a better understanding of what your taxable income will look like. First, we're going to start off with what your profit and loss or net income is. Both terms are used interchangeably, and regardless of which term you use, you'll arrive at the same answer. When you're calculating your profit and loss or your net income, you simply take the total of all of your business income or your revenues and subtract off all of your business expenses. This amount tells you if you have a net profit or net income when you have a positive amount, or you may have a loss if you have a negative amount. This is the number that you will use on your tax return to calculate the amount of your tax liability. Next, let's take a look at your bank account balance. This is generated by adding up all of your deposits and subtracting all of your withdrawals from your bank account. It's the amount of money that you have in your bank account as of a certain period of time. The best way to calculate this number is to make sure that you're reconciling your bank account to ensure that you're taking into consideration any withdrawals or deposits that have not cleared your bank. If you're an accountant or high-stress professional, you want to start enjoying your life more, both at work and at home. You've likely built a successful career, but at what cost? The problem is, you're so buried in deadlines and to-do lists that there's no time or energy left for the things that really matter. You're great at managing clients, deadlines, and numbers, but your own stress, time, and well-being, well, they always seem to come last. The constant pressure leads to burnout, guilt, and feeling like no matter how much you do, it's never enough. I see this all the time. As a CPA with over 20 years of experience and a certified coach, I've helped high-achieving professionals, just like you, go from stress and burnout to a more integrated and balanced lifestyle using the reinvention process. This process helps you reduce stress, reclaim your time, and finally build a healthier, happier, and more balanced lifestyle without sacrificing your success. The truth is, stress doesn't go away on its own, and eventually the cost isn't just exhaustion, it's your health, your relationships, and your love for the work you once enjoyed. If you're ready to build a life that you don't need a vacation from, it's easy to get started. First, schedule your complimentary stress audit and clarity session, where in just one session, I'll help you pinpoint what's really draining your time and energy. Create a personalized action plan to help you simplify your life, reclaim your time, and increase your productivity so that you start living with more energy, focus, and freedom. You don't have to keep doing this alone. I can help you customize a plan to stop the overwhelm and start enjoying your life again. Go to financialadventure.com, click on the Work With Me button, and book your free session today. Let this be the moment that you stop just surviving and start living with more control and finally enjoy a more integrated and balanced lifestyle again. In the meantime, check out all the other resources and solutions on my website that you can immediately apply to your life so that you can stop being stressed out and feeling like you're never doing enough, and instead breathe a sigh of relief at the end of the day knowing you've accomplished enough and can enjoy your life more. If you're still wondering why these two numbers may be different, let's dig a little deeper. One of the reasons these numbers may be different, and a reason that I see most frequently, is when a business owner takes money out of their business for personal reasons. Think about this for a minute. If you're taking money out of your business for personal reasons, it would not be considered business income, and it's not considered a business expense either, right? When you take personal money out of your business, this would be considered a draw, and it does not show up on the profit and loss or the income statement at all. You would record these amounts on your balance sheet in your equity section since you're taking equity out of the business. You'll see your business bank account go down for the amount of money that you take out of your business personally, but your net income or loss will not change. If you have a situation where your bank account balance is lower than your net income, this could be one of the reasons for the difference. Another reason you may see a difference may depend on whether you're looking at an accrual or cash basis income statement. I'll give you a quick description of each, and then I'll explain more about why this could make an impact on the difference between your bank account balance and your net income. If you're looking at a profit and loss report that is on the accrual basis, this means that it's taking into consideration your accounts receivable and your accounts payable. Your total income is calculated on sales that you've made but have not received payments on yet. And your expenses are calculated on bills that you've received but you have not paid them yet. If you're looking at a cash basis profit and loss report, on the other hand, there are no accounts receivable or accounts payable numbers taken into consideration, which means that you're only looking at income that you've received payments on and expenses that you've already paid. When you think about these two reports, you could have completely different amounts for your net income if you have a high amount of receivables that you need to collect from your customers, or if you have a high amount of bills that you haven't yet paid. If you're comparing an income statement prepared on an accrual basis, it's taking into consideration income that you have not received yet and would obviously not be in your bank account, and bills that have not been paid or deducted from your bank account. This can cause a significant difference in these two amounts. Loan payments are another way that your bank account balance and your net income can be different. When you take out a loan, your loan is recorded as a liability on your balance sheet. And when you make your loan payments, this liability on your balance sheet goes down by the principal amount when you make each payment. The only amount that would be reflected on your income statement would be the expense portion of the interest that you're paying on the loan. In contrast, you'll see the full amount that you're paying on your loan decrease in your bank account balance. There are many other reasons why your bank account balance may not match what your profit and loss or your net income shows, but I wanted to jump into a few of the most common scenarios on this podcast for you. Most importantly, I want you to understand that looking at the balance in your bank account will not give you a true profit and loss or net income or net loss amount. Your bank account is essentially just capturing the money coming in and the money going out of your bank account. And there are times when the movement of these funds does not impact your profit and loss. If you're using a computerized bookkeeping system like QuickBooks, you can easily pull up your profit and loss report or your income statement to see what your net income or loss is. As long as you have all of your transactions recorded properly, this is the report that you will want to use to start thinking about what your tax liability may be. You can run this report on a year-to-date basis or any other time frame that you want to see your net income or loss. When it comes to this time of the year, you really want to be looking at your net income or your profit and loss report to see how your finances are looking and to make decisions on any tax planning strategies for the year. You can even run comparison reports from last year to this year to see how much of a difference there is. Just make sure that you're not looking at what your bank account balance is showing you to determine what your tax liability will be based on. I know this can be a complicated concept and misconception that many business owners make. Having your bookkeeping up to date will allow you to make a few simple clicks to generate the profit and loss reports that you need to prepare for the upcoming tax season. When you prioritize your tasks and you set up efficient processes, you can ensure a smoother, more enjoyable year-end, and you'll be prepared and ready to go when it comes time to file your tax return. If you need help or you still have questions about why there's a gap between your bank balance and your net income, let me know. And you know I'm going to ask, what's at least one thing that you'll take away from this episode that will help your business succeed and grow your bottom line? If you need some accountability, join our private Facebook community and post your action item. We'd love to support you. Thanks for taking the time to tune into this episode of Mastering Your Small Business Finances. If you enjoyed this episode as much as I enjoyed creating it for you, I'd love for you to give it a 5-star rating and subscribe to the show so you never miss an episode. Visit financialadventure.com for the show notes, links from this episode, and while you're there, leave a comment if you have a topic you're interested in learning more about that affects your bottom line. If you're looking for a community where you can ask questions and get feedback about your small business, join my private Facebook group. You can find the links to this group and more on financialadventure.com. And remember, any financial information shared on this podcast is not to be considered professional, financial, or tax advice and should not be solely relied upon. Please consult your CPA or tax advisor for an opinion on your specific circumstances. I'm looking forward to having you tune in next time. Until then, dream big, follow your heart, and love what you do.